Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Thursday, May 5th, 2011. This morning I'm talking about decisions, and frankly I'm talking about the interest rate policy decisions coming from both the UK and the Eurozone. All right, the Bank of England came out just a little bit earlier this morning, all right, and they maintained the current monetary policy they have, which was expected, so they maintained the asset purchases, and they also kept rates steady. So you can see earlier this morning there was a big sell-off in the UK, but that actually wasn't based on the rate decision, but that was also, that was based on some fundamental news, okay, that was PMI data, which essentially took that down, showing that manufacturing is slowing down there. So that's what happened in the UK. Now the ECB decision's coming out in about two to 3 minutes, so there could be some volatility. I want to try and catch that real quick, but first I want to show you just the Aussie. Aussie's been selling off as well. You can see where it levels 106, just above 106.50. All right, they had overnight retail sales figures came in way worse than expected. They came in showing that they declined 0.5%. They were expecting a gain of 0.5%, so that's bad for the Aussie. All right, and then we also want to talk about what's going on with the Kiwi. Now, with the Kiwi's also selling off, same reasons as the Aussie, well, with the exception of the retail sales figures, that is, because they had their employment report last night, and it actually came in better than expected. So they're adding jobs there. The unemployment rate actually dropped 0.1% to 6.6% from 6.7%. So that was a good thing. But a lot of that has to do with the reconstruction going on after the earthquake. So what I want to do now is I want to take a look here at the euro ahead of this decision just to see what's going to happen here. And we've got, you can see that we've sort of put in a little bit of a bottom here, just above 148.20. We've got 148 down there, which gives us a little bit of room to the downside. The thing about the ECB decision here is that we're not expecting a rate hike, but we're waiting for the policy statement that comes with it, because that may give us an idea if they're going to try and speak hawkishly about the next policy meeting next month, or if they're going to potentially raise rates next month or the following month. But it doesn't look like they're going to do it today. They're going to keep rates steady at 1.25%, but we're just waiting for that actual news to happen to see if there is any volatility surrounding it. The problem with this is everybody's sort of waiting on Trichet's statement rather than what the actual news is. So in the meantime, we can see that there is some weak data also in the Eurozone. We had German factory orders came in way worse than expected. They showed an increase of 9.7% versus an expected 15.4%. All right, so that means factory orders declined 4%, and they were expecting a gain of 0.4%. So the data is starting to look weak all around the globe, whether it's here in the U.S. or abroad. But essentially, we've had this sort of this cheap money flowing from the Fed, as well as some of these other countries. I mean, let's be honest. The UK at 0.5%, the Eurozone at 1% for most of the past year. They did raise rates last time around. That's caused a lot of temporary gains to happen, but I don't think anybody's actually addressed the structural issues that are out there. So just waiting to see what the actual official decision is here from the ECB. I'm guessing no change. I'm guessing by the lack of market reaction that nothing's really happening here, but this could be volatile, say, for the next 20 minutes or so as the statement comes out and Trichet's sort of reading his deal. With the unexpected or nothing really happening here, I just want to show you the dollar versus yen real quick. We just slipped below 80. Okay, you can see that right there. All right, yen strengthening. Let's go back and see if we can look at this on the daily chart. Okay, and you can see that this is the first time we're back under 80 since the natural disasters that they had over there in Japan. So, that's one of the interesting things to see how low the yen is going to, how low dollar is going to go versus yen here. How much yen is going to strengthen before the Bank of Japan steps in and tries to do something to try and keep this from happening. So we could be seeing another intervention coming sometime soon, but they may need to do something, to help sort of the economy recover after that natural disaster that they've had. So just want to flip back to the euro real quick. You can see, man, still on a nice upward trajectory on the daily chart. And I want to flip it back to the 5-minute chart here. Whoops, let me go over here. Do 5. and then we'll go to the Eurozone. And we'll get back to 1 day. All right, so Eurozone's still sitting in there just above 148. So nothing really happening there as far as big, exciting news. But you can see that from looking across the board here with we've got mixed dollar strength today. The dollar has been strengthening against all, but really it's the Japanese yen that's showing the most strength. Nikkei was up the other day; they were closed, but we've got a situation here where it's really been dollar weakness was driving markets. Today we have commodity prices lower. All right, gold is pulled back to just above 1,500. Oil's now trading a 109 handle. Silver is back down in the 30s. Okay, it would just approach 50. So we have this sort of commodity sell-off, which is also contributing to the commodity currencies being lower. So that's Aussie, that's Kiwi, and that's also the Canadian dollar as well. And it also puts a little bit of pressure on the euro. I mean, not too much. You can see the euro sort of hanging in here just above 148 versus USD, but euro does have some correlation to the oil market. So we haven't not seen it today, and it looks like the comments from the ECB are pretty much what's been expected. So that's what we're looking at today. Other countries are moving forward with their economies. They have to do what's right for them. They have to combat inflation so that they don't attempt to sort of get themselves out of their problems on the backs of their citizens by having things cost more so government can pay less. And that's unfortunate, but that's what we do here in the U.S. So anyway, that's what I've got for today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.